Wow, this is crazy for the housing market crash. The Federal Reserve just released a report that consumers are now expecting mortgage rates to skyrocket. Take a look at this expectation right here. Households expect the 30-year fixed rate mortgage to rise sharply in the future to 6.7% on average a year from now and 8.2% in 3 years. Folks, despite this, consumers somehow actually expect consumer home prices to grow 7% over the next 12 months. And rents, not only are they not expected to go down, rents are expected to go up 11.5% over the next year. People are also getting discouraged. The average renter now reports the odds of owning a home at 43.3% in the next year. That's the lowest read ever in the history of this New York Fed report, and it's down from 51.6% a year ago. Now, in my opinion, somebody's got to be wrong here. If rates go to 8.2%, that would be a full 5.5% higher than where we were at the end of December, which is a removal of 55% of buyers' purchasing power. And there's no way prices go up in that sort of environment, especially as the wedge between fair value rents and fair value home prices widens. That is, home prices have kind of run away from fair value rents, and we actually expect rents might continue to tick up as home values tick down, so we can finally marry the two again, realistic home values with rents that are appropriate for those home values. Now, I know some people like to say, oh, but rates used to be 8% back in the 80s, it was fine then. Yeah, well, home values were also substantially less expensive. The median price for a home was about $100,000. Today, it's over 4x that, and we just came off of rates sitting around 2.8% at the end of last year, setting a lot of high real estate comps. Higher mortgage rates, especially if we start crossing the 6% threshold, bad. 8%, devastating. Now, I'll tell you exactly what I'm doing with my real estate portfolio right after a message from our sponsor. Now, I want to tell you about a company I really have been excited about, and that company is CoinStats. CoinStats is the best place to manage your crypto and DeFi and crypto portfolio all in one place. So you can connect CoinStats to all of the largest wallets like MetaMask, just partnered with Apple Pay, and Ledger, in addition to exchanges like Coinable, Crypto.com, and BlockFi. CoinStats lets you have one dash card for everything. That way you can simplify your finances and get the whole picture of what's going on with your crypto and DeFi portfolio. I have a lot of wallets with different companies, and sometimes it's just hard to keep track of everything I hold. Right now, I just have a spreadsheet with all my holdings, and then I gotta manually go in there and update it every time I make a trade. CoinStat means I don't have to do that anymore. They also take the most advanced security features available to help protect your holdings. So thank you to CoinStats for sponsoring today's video, and make sure you check them out in the link in the description down below for a special offer from CoinStats. So what about my portfolio? So I'm selling, but I'm only selling high because I'm preparing to buy low. But now for a quick update on me. Out of 27 properties that I have already sold 11 since January. I have 4 more in escrow. I plan to keep my house, my dad's house, my work home, and 2 renovation projects. That's 5 in total. So I'm gonna keep 5. That means I have 7 properties left to sell, and 4 of them will be listed in the next 2 weeks, with 3 more coming within the 30 days thereafter. So ideally, about 60 to 75 days from now, I'll be down to 3 keepers and 2 projects, and the rest of the money is going into metkevin.com/Series A, which is a really cool startup that I'm super excited about. And if you want to learn more about it when we're ready to announce it, make sure to go to metkevin.com/Series A, drop your email.